Okay, let's go ahead and get started. Welcome everybody to the Client Support webinar for November 27th, the day before Thanksgiving. I want to wish everybody a happy Thanksgiving as well. My name is Bennett McDowell, founder and CEO of TradersCoach.com. So I'm going to be here with you for the next 30 to 60 minutes, depending on how long this session goes, and I will answer any of your questions out there. And this is really a great time we get to spend each and every week here on Wednesdays. It's for clients only, the live session. We do share from time to time the recordings of these sessions to the general public, but the live sessions themselves are held each and every week for only our clients. Now, if you ever forget the password to gain access to this, we do send out an email on that, but if you don't get the email, it's always located in the software download pages for the software you purchased. So you can go back there and look it up. We haven't changed the password in quite some time. We don't certainly plan to unless it gets compromised. So we like to keep the same password. That way it actually is easy for you to remember as well. Okay, and the access link that is sent to you from our webinar company, which is called Citrix, is usually the same one. We usually have to change it about once each year, so you're probably good way into the next summer months. So again, I want to welcome everybody. I want to wish everybody that is in the United States here a happy Thanksgiving. For those of you overseas, we welcome you too, and I know the time sometimes is difficult for you to attend, so the extra effort that you make to be here is appreciated. Now, we want you to ask questions during this webinar. This is your webinar. We're not really, I'm not really here to explain things going on for the week and so forth, the markets. We have a lot of subscription services for that. But if I find anything during the week that I think is an excellent example that you all can benefit from, of course I share that. But primarily here, we're here to answer your questions. So feel free to ask those by typing them in to the questions window, and locate the questions window on the webinar administration panel. And you can also open up that questions window by double-clicking on the arrow to the left of the X, and then that will open it into a separate window where you can stretch it and make it larger as well. So go ahead and get set up. Volume can be controlled right on your computer, so that should be easy enough. If you lose connection, just log out and log back in. If you can't hear me, let me know so I can make sure it's not something on my end. And you can just do that by typing it into the questions window. I see everything that gets typed into there. And Bill, happy Thanksgiving to you as well. Thank you. And let's go ahead and generally take a look at some things I want to start out with this morning. In front of you now, you should see a chart of the Dow Jones Industrial Average. Now, this is a daily chart. And this is one we've been looking at quite often, almost every day and every week over the last multiple years. But for now, right now, what we've really are excited about is we're getting close to the Wave 5 target zone. And I'm just going to go ahead and indicate that here. So give me 1 second while I get the pen set up. But here's where current prices are here. And here's our wave target zone here. So we're pretty darn close to this area, as you can see. So we could look at prices reaching up to 16,210 all the way up to 17,230. Now, if it gets extended and the market blows through that upper range, that's not improbable. In fact, it happens quite often, and that's called an extended wave. And when that happens, we certainly could see prices getting up as high as into the 18 or 19s before this significant trend ends. However, when we talk about probabilities, we talk about a target zone that has the highest probability, and that's the one I've indicated with the box. So anywhere between 16,210 to 17,230 is the most likely range that this trend is going to reach before we start to see some type of major change in trend. So we're close. We've got a little bit more room to go. I think actually it wouldn't be surprised to see some form of correction between sometime after Thanksgiving and let's say the mid period of December. I would expect a correction coming down probably back around 15,500 before maybe coming back up to the upside. So markets don't usually go in a straight line. They zigzag, and I think probably we're due for a zig, so to speak, to the downside before a zag back up to the upside. So we've had a number of price bars in a row, actually really since the low back in October on this range here, which is back in this area here. It's been pretty much a straight turkey shoot, no pun intended for Thanksgiving, all the way up to this price bar here. And so that's unusual. If you look at some of the previous moves to the upside, we've already exceeded that. And so we're in this kind of range here. So I would expect some type of pullback here and then maybe something forward like this eventually. Now, if by chance the market surprises us and just keeps on moving to the upside, which is, very possible, and we get up into this area and then we start to see a sell-off, well, we have to be careful here because we are in the target zone at that point, and we do have to look for a possible change in trend. So we'll need to keep an eye on our indicators at the bottom, and one is called the APOL, the other one is called the PTF, and then we have one at the very bottom called the Trendline Master. All three of these are indicators which are add-ons to the ART software. So if you have the ART software and you want to purchase these in addition, okay, you certainly may do so. All right, but they give us an idea. They help us filter out signals and trades and so forth, so they're very helpful. So we'll keep an eye on that. We've got a lot to keep an eye on here, but really for the most part, we're in good shape. Notice a very steep trend line here, okay, that actually will be redrawn probably a little bit down in this area here soon. But, all systems are go for right now. We really haven't had a significant break to this point on the actual trend on the Dow Jones to the upside. Notice the pyramid trading point here. All right, so your stop is nice and tight with pyramids on this market. So we're in good shape. Now I want to take a look at the S&P E-mini to see how that's looking. And this is a 60-minute time frame, so this is technically an intraday time frame, but it is a very long intraday time frame. Most day traders will not trade this time frame. It's just too long. But it does give us a glimpse inside the daily. And as you know, in the Elliott wave, there are waves with inside waves. And so if we look at the S&P E-mini, we're kind of getting a little inside look into the Dow as well, because the S&P E-mini and the Dow closely trade together. So we're not getting a look into something totally different. And notice that on this particular chart, we are already in this shorter term target zone for a wave 5 to the upside. And that's this area in here. All right, so this is the target zone. Notice that on the OWL, we have a peak here. So we've got 3 here, nice 4 here. And notice the 4 had a bearish OWL, which is what we expect. And this bullish OWL on the right side is 5. So we've got 3, we got 4, and 5. We do have bearish divergence between 3 and 5, so that's expected. All right, we have a yellow PTF. We got an OWL that's still bullish, getting closer to the 0 line. And we still are above one of the short-term trend lines here, so we're still in good shape. So while we're in the target zone, we've got a pyramid that's done a great job here putting a key support level at this point. So what we want to do is wait and see what happens here, but I would expect the sell-off, okay, eventually occurring here. We may go up a little further and then sell off. And at that particular point, that's when probably we will experience a correction on that daily chart for the Dow Jones. So this is kind of aligning itself perfectly to indicate that we are near a top, a wave 5 top on the 60-minute. And even though that's a wave 5 top on the 60-minute, that does not mean we are in a wave 5 top on the daily. It just means that this leg up all right, will experience a ABC correction down to the downside here, bringing us down to 15,500, and that sell-off on the daily down to 15.5 will be a change in trend on that 60-minute. And then once that's over, then we'll have another move probably to the upside and then get ready for a final high on the daily. So that's kind of what we're looking at on this. So don't be expected to see some type of correction here. I would say probably within the next week at this point. If we move on and take a look at a few stocks here, here's NinjaTrader, here's FING. This is one that kind of is interesting right now. It's a little bit risky in terms of a long trade, but this is a wave 3 top. This could be a 4 bottom here. It has retraced enough. However, there's not a very clear ABC here, okay, which means, and we still have a negative owl, which means that we may have a wave 4 still unraveling. So we may have an A here, a B here, and then come down one more time for a C, and then have wave 5 to the upside. All right, that's where we could be in this wave count. However, all right, we also may have had just a very quick and simple wave 4 to the bottom with an A, something like this, on one price bar and a C down there. That's possible. This could be 1, 2, and then 3. And if that's the case, prices will not go below this current low on the possible wave 4 with this count. So there's a couple things to watch for. So here's how I would play this one. And this is a good educational one, which is why I'm bringing it up. So we have wave 3. All right. We have 4 confirmed. We're in 4. There's no question about it. The question is has 4 put in a bottom or not? Now, I would not go long on this until we get a bullish owl. So that means it's got to get above the 0 line down here. And if you get that, what I would do is if you get a pyramid and the owl is bullish at the time prices get above the apex of the pyramid, in other words, you actually take the trade, then I would take it and put your stop probably either under wave 4 or at the bottom of the pyramid, depending on when it forms, and make sure you use risk control and try to catch that next wave 5 in case this correction was a simple, quick ABC correction and it's done. If it's not, you'll be stopped out and you'll have another opportunity on the next move to the upside after a new low is made. So you cannot always take 100% of the risk out of trading, but you can have a game plan. That's very important, and it's important to understand how to approach the markets when you have 2 possible wave counts. So in this case here, one possible wave count is wave 4 bottom is in, and the other possible wave count is that the bottom is not in, and we still have C wave to go down. And we're going to wait and see. The owl may keep us out of any long trades while this wave 4 still unravels if it's doing so. Any questions on this? Because this is a great learning experience that I think everyone here can benefit from. Okay, let's take a look at another one here. Here's APOL, okay, which is Apollo. And this is a stock in the mid-cap range, around $26 at this point. And here's one that's also a little tricky. We got a wave 3, okay, underway, which is why I'm looking at this. We don't have a negative owl yet, so technically we're not sure if we're in wave 4 now or still in wave 3, okay? If you had a long trade on this, you would have been in over here, okay? And your stop would be here, so actually you'd be in great shape right now. But if you're just showing up to the market right now, the question is, should you take this long trade or not? Well, technically, you still got a bullish owl, so you could take it. You got a green PTF and a green trend line. And if this is still in wave 3, then prices will go ahead and immediately move up to make a new wave 3 top over here. And then this pullback is just a minor 4 inside a 3, okay? If, however, we have a situation where wave 4 is just getting going, then this is probably A here. This would be 3. This could be a B here. And you could have C come back down to around the 0.618 area and then wave 5. So if that's the case, you'll probably get stopped out on this pyramid here. But again, is it worth the risk of the trade? Perhaps. Okay, this is something you can answer, all right, based on your trading rules. But if you're wrong, you're going to lose 2%, and then you try again after a bottom. Once you catch that bottom, you'll find that even if you miss it once, you'll still make a nice profit on that trade. Okay. All right, let's see what we got for questions coming in. Bill's asking one here. Would you ever go long without waiting for the first P pyramid on an early wave 5, or is that too risky? I would say basically I might do that if the wave count is so clear that I see an Elliott wave ABC correction and a nice wave 4 bottom, and then only go long when the owl is bullish on an uptrend, for example. So I'd have to wait for that bearish wave 4 owl histogram to get above the 0 line before even considering a long trade. So then at that point, I'd either wait for a pyramid, or if I feel it's really clear and a pyramid will be forming later, but I want to try to take an early jump in now, and prices are close to that wave 4 bottom for a nice trade size, then I might consider it, sure. Good question. Okay, anybody else? Feel free. Also, too, just so you know, I know quite a few of you trade the Forex market, and you know the ART system and all our indicators work beautifully on the Forex. All right, so you know, feel free to use the ART system on the Forex market as well. Here's an example of a Forex right now. All right, and then we have the ART scanner running down here on the lower right-hand side as well. All right, hey Keith, how are you doing? Happy Thanksgiving. Thank you, you too, Keith. Can you look at EWP on a daily? Certainly. Keith, what platform do you use? Ninja. Okay, let's take a look at it on Ninja then. And that was EWP. All right, so here we have EWP here. Notice a nice 3 to the upside on this right here. We are in the midst of a wave 4, okay, A, possibly B, C, maybe a wave 4 bottom in here, all right, and we'll take a look and see if that makes sense in terms of the fib retracement. So let's take a good look and see what we got cooking here with some more history. All right, so we got a nice move to the upside here. This is probably a pretty good indication here. Let's see what we got here for here. I would say at this point we'll focus on this move from here on up and put our wave 2 right under this area here. So let me just get the fib retracements. Set up here. I'm going to go from here and move this pretty much all the way up here. And you can notice here that the 38.2 on a little bit longer of a move up is down in this area here. All right. So that's one thing to kind of keep an eye on here. The one thing I do want to take a look at is I want to take a look at the box data here. Let's take a look here and just see. I want to see what the low is here. We got a low here of 27.5. We got a low here of 27.8. So we're lower here, and then we had a slight move up to the downside here. So actually, probably what I would do is I think probably the best thing to do is let's try moving this up a teeny bit here and take a retracement probably off one of these levels here instead. So probably something more like that. All right, you're still a little shy of the 3.0 here, okay? But you know, 15% of the time it doesn't quite make it. So with a negative APOL here, okay, I would be very reluctant to go long yet. We have to wait it out here. Also, too, in terms of C wave, this is a little bit of a shallow C wave, so this would be A, B, C. Normally, C wave is much longer. So I'm kind of suspect here. I think maybe we still could be in wave 4, and if that's the case, we may see a more complex 4 coming back down here, something like this, before a long trade is there. So you got a negative APOL, you got a green PTF for wave 5, but you're technically still have got some, you basically are out of any of the uptrends because that ended when prices kind of got below here. So you got a yellow trend line master at this point. So I'd be a little reluctant on moving on this right now. Now, if you were already long on this particular mark, what I would do is realize that you got a pyramid trading point right here. All right, so there's your stop for your most recent pyramid. However, when you have a negative APOL, and this is a good educational point as well, Keith, you have a situation here where you've got some scaling out opportunities when that APOL went negative. In other words, you had the MP and the 2B, and then you have to make a decision if prices, if that warrants a scaling out, considering your stop is not much further down, okay, but it'll give you an extra couple points maybe. All right, so that's how I would take a look at that. You'd be still long in the ART system on this right now, but if we go reach much further down, you will be stopped out, okay? All right, let's move on here. Let's see what else is cooking. Zeta, hello Zeta. How do you look at trend lines? Would you take a long trade below the trend line? Depends on the Elliott wave count and how clear it is, but as a general rule, the trend lines are there to keep us from getting into trends too early that may not have ended yet on the opposite trend. So we kind of do pay attention to the trend lines. Good question. Dieter, hello Dieter. What are your views on gold and crude? Well, let's take a look. Let's go over here and type in a few future symbols on these. We'll take a look at light crude here. All right, so we've had kind of a little bit of a messy market, haven't we, in crude? Okay, we still got a meandering up channel trending to the upside kind of. So we've got higher lows with some volatility. We've had a nice move to the upside, but a pretty dramatic move to the downside right now. So this is in a complex correction. Let's take a look and see what's cooking on a weekly chart for this. And you can see the extended channel here forming a pennant. So let's take a look at some lines here. Let's draw a few lines here. So notice here, if we start drawing some lines down here like this. Whoops. Sorry about that. Let's get that one down there like that. Okay, and draw one more up here. We're starting to see a classic pennant forming, aren't we? You get these during complex corrections. Now remember that this is on a weekly chart. And so when it's messy like this, it can be quite messy on a daily chart. So in a case like this, you're going to get a lot of movement back and forth with a lot of volatility on the daily charts until we break out of this zone here, so to speak. So if we go back to the daily chart here, you'll see these trend lines superimposed from the weekly chart onto the daily chart, and these are your pennant lines. So you'll have these swings inside. Now, you can make some money on these swings, but if you really want to wait for the big breakout, the big trends, you got to wait to penetrate some of those, okay? So you're gonna have to hang tight on this for a little while, okay? And so that's crude. Now, if we look at gold, gold's at an interesting scenario now. It's been moving down, and you know, of course, there's an inverse relationship between gold and the equities market. So we've had a lot of power this year in the equities market to the upside. So when equities are strong, gold usually is not that strong, and that's what we've seen here, gold coming off, okay? Now, what's interesting is we think we're getting probably kind of close to some form of bottom in gold, and when I say close, maybe in the next 6 months or so. And so here what we want to look for is when the Dow Jones reaches that price target zone that we talked about earlier, and we see bearishness coming in, and we see the trendline master changing over from bullish to bearish, and we see bearish pyramids, and we see key levels of support being broken, and the Elliott wave count rolls over, then at that particular point, we'll be shifting money out of equities and into some of the metals and even into some of the ETFs that are 3 times the bear market. So you can really pack a punch. So we're actually really looking forward to the change in trend, even though we feel we got another blow-off area here to the upside, which can be quite profitable. But again, when it starts to roll over, if you come here every Wednesday, of course, we're going to start to see that. But the point is that you want to be ready to take advantage of that move to the downside. And there's a variety of different ways to do that. We cover this in much greater detail in the Monday morning market kickoff. So if this is something you want to stay atop of, I would definitely subscribe to that. It's very affordable, and we start out the week looking at this stuff. Okay, great. So very good. Let's see here what we got cooking out here. Okay, so that's gold and crude. Keith, I was going to wait for the owl to go positive, so that may help let wave 4 play out. Absolutely. He's talking about that one we looked at before when the owl was still negative, and I think I still got that one up here. Okay, so I think that was EWP, Keith. And as you can see, the owl is negative here, so you really don't want to be taking any long trades until it goes positive. So the idea here is if wave 4 is not over, the owl probably will stay negative. So it'll keep you out of trouble. This is a great example of how you can learn to connect the dots in order for you to filter signals based on a strategy that you can use consistently. So it's really a connecting the dots of these 3 indicators plus the art software as well. All right, Keith, let's see what we got else here. How about entering now on PSX? Let's take a look at PSX. Okay, a couple things on PSX. We're probably here, obviously, into wave 5, because here's wave 3, all right? So let me just grab my pen. So here's 3. Here's the biggest owl. That's 3. Then we went into, here's a great example of how you can have an oscillator. Now I'll go back and forth a little bit. A, B, C. Here's what makes wave 4 so tricky, okay? Now, here, on this positive owl here, you could have taken these pyramids, all right? Now, if you took the first one, all right, the actual, when price is cleared, the owl was just positive down here, okay? So if you took this one, and that was an MP, so you probably wouldn't have taken that. You probably would have waited until this one. You would have taken this one here and then gotten stopped out here, all right? Then it went into another free fall, all right? You got P's forming all here, and that's C wave. So I'm going to erase these drawings, and I'm going to redraw things a little clearer. So the idea behind this was that this was A, this was B, and then this was C, okay? So this is your ABC for 4. All right, then we started rising on a bullish owl in this period here, all right, and we started getting above some key levels of support at this point. All right, first pyramid is here, and so now based on this, your stop would be here, and your target zone is going to be a fib extension above here, probably around 74 to 70, I'd say 8 on that. Just guessing. So that's probably your target zone somewhere around in here. So at this point here, then you determine if the trade is worth the risk to reward ratio and you take it, okay? So based on your question, Keith, you certainly could move on this right away, okay? Okay, Dieter, hi. Would you mind giving a summary of your weekly top 10 service features and benefits? Be glad to. The weekly top 10 service is a subscription service, and what we do with that is we give 10 of our best trading picks for the week each and every Sunday. And we have a place where you log into and you retrieve all the new picks, and the picks are posted by 12 p.m. Pacific time. So by 12, and that's in the United States, of course. So by 12 noon, all the picks are updated each and every Sunday. And what we do is we give you exact entries, we give you the direction, we give you a suggested exit area, and so forth, and a price target zone. And so you take a look at the list, and we give you 4 stocks, we give you 2 ETFs, we give you 2 futures and 2 Forex. And the nice thing about that is if, for example, in 1 week not all of them get filled, and quite a few do get filled, so if they don't all get filled, then we take a look at them again the following Sunday, and if there's still good potential trades, we keep those on a pending list. And so it's very probable at times, I know during the early part of the year during the bull market, we had so many possible trades that they far exceeded just 10. And then as we get near tops like we are now, we start to cut back on keeping the pendings pending that didn't fill because they may not be the same risk to reward ratio. So we're constantly looking at the overall markets and selecting the best trades for where the market is at. Now, the other neat thing about these are position trades. These are not day trades. And we only update them once a week. If you're using the ART software, of course, you can move your stops up, do whatever you want based on the ART system. But we have so many subscribers also around the world that are using a different approach, one of their own types of approaches. And so therefore, what the idea behind here is they will use our entries and exits just exactly as we post them. And because these are position trades, you don't need to micromanage them. So an update once a week is all you really need. And it's just been a huge success. We have a ton of subscribers worldwide. The account's doing really well. And on the home page of the traderscoach.com website, you can actually go and check out all the trades for this year. And so we'll keep an ongoing tally of those each and every week. So did I miss anything? Dieter, is there anything you were looking for that I did not mention, that I may have missed? Feel free to ask. And while he's getting back to me on that, one thing I just want to tell everybody out there, especially our new folks that are using our software, is that by coming here every week, you're going to learn a few little tidbits, and over time you'll be able to put it all together. And the idea is you'll be able to look at charts just as quickly as I do and have a pretty good idea if the chart's too messy to trade or if the chart's clean and clear and how all the tools or indicators are aligning. I want you to look at the tools kind of like a pilot looks at his instruments on an airplane. And I know Bill, you're a pilot out there, and Bill and I talk about this, and it's kind of, you want to trade the markets by relying on your instruments just like a pilot does. And so when all the indicators are all pointing to the upside and the ART software is pointing to the upside, then you're obviously in a move to the upside regardless of what you hear on the news. So you don't want to be distracted by what's out there. Stay focused on the instruments and you'll do really well. All right, let me just get back to Dieter here. What do the ROI figures mean? How are they calculated? Dieter, if you go to that actual page where we have the closed trades, there is a link on our exact calculations on how we calculate the return on investment. Okay, and we do it on a point basis because we try to keep apples to apples. And you know, futures markets, if you gain a small percentage in a futures market, the actual dollar amounts may vary. So if you're interested in the futures market, you need to take that into account, but that's an overall return in terms of points gained or lost, okay? All right, so let's see here. Fly the plane, as Bill says. Yes, fly the plane, but fly the plane using your instruments, okay? And be careful of what they call vertigo, which is getting distorted by cloudy weather where you can't see the horizon. And of course, in the markets, that means don't get distorted by what you necessarily hear on the news, okay? All right, so let's take a look at a few more here. Let's go to Apple. Let's take a look at Apple here and see how that's cooking. And Bill, I know you're using TradeStation, so let me truck on over to TradeStation. I'll take a look at Apple here. Okay, so we got Apple here climbing pretty well at this point. It's at 542.90. Looks to us at this point here, you know, we're still at the 61.8% range, so we got to be a little bit careful here. We may have had a wave 5 bottom in if this was a failed 5, but again, you got to be a little careful because at this point here, I'm kind of wanted to see it. I want it to clear, okay, the 61.8 before I get really too excited. So I think what will happen is if we get another surge up, we'll probably move around, I don't know, 580 or something, then pull back, and then at that particular point, I may decide to issue some long signals on it. But for right now, we're right smack in a possible Fibonacci retracement zone for one more move to the downside. So I've got to be a little careful here. Now, on the weekly charts, however, it looks like this trend down is over, unless it's going into a complex wave. So here we've got a nice wave 4, okay, but we don't really have a clear ABC. We've got a little ABC here, but we do have a pyramid here. Now, don't forget, this is a weekly chart, so you're not going to be taking that pyramid. But you do have everything going green here, so it's very possible we could be in the midst of a wave 5. Now, if we are, all right, then chances are we're going to get a pullback here pretty soon, and we'll have some other opportunities to get in because if we're already in wave 5, then we're going to get up around 750 to 800 before it's all over. So we got plenty of profit opportunity. But also, too, we may have one more swing down as well. So we're going to watch that very closely. If this goes into a complex correction on the weekly, then we may see this owl turning bearish and going back and forth for quite some time before we get another spring to the upside and a final bottom on wave 4. So Apple has got a couple little hurdles to do. This just to me looks like a classic wave 3 only to the downside, and we're now in a classic wave 4 to the upside. So that's what's holding me back on a long trade. That was a good one to look at. Thank you. And you know, the other thing too is for those of you that want to take a long trade here, hey, you can do it. Just use risk control. And if you're stopped out, you're only going to use 2%, so it may be worth the risk of getting in early. Okay, it just totally depends on how you want to approach it. For example, if you had gone in here, when prices cleared here, I think you would have had a slightly bullish owl here. Everything could have been green. You had some nice pyramids, so you wouldn't have been stopped out. Your stop would be right here, and you'd have a profitable trade on this. Even if it turns out to be a correction. And if it turns out to be the beginning of a new trend, then you got a nice early entry. So they're trade-offs. Okay, let me just see if there's anything else I missed. Okay, Dieter's question on calculated answered that. In a nutshell, what we do is we take the entry price, okay, and then we subtract out the exit price. That gives us a difference value, and then that value is divided by the entry price. All right, and then that gives you a percent return, okay, on the actual amount gained or lost based on the entry price. And that's a pretty standard way of calculating percent returns off point values. Okay, anybody else? Great session today. And an excellent turnout considering the day before a major holiday here. Okay, Daryl. Hey, Daryl, I wanted to ask you, glad you're here. We sent you a new update of the Trader's Assistant. And I think the support staff asked you to let them know if you got it and they haven't heard back from you. So check your email and also your junk email box in case for somehow the notice got in there. In any case, you can go into the download area and download that new update yourself and just install it right over. And the idea behind this new update, it's called version 2.0, and we've worked on the printing, so we think we got that fixed, but we're asking everybody to test it, okay, to be sure. All right, so let's take a look at Disney, DIS. Nice move to the upside on this one here. I wouldn't chase this market. In other words, I would not get long on this market yet. I mean, now it's too late. You should have gotten long on it a while back. But in any case, it's a little late to chase this because we're seeing such incredible bearish divergence now. So I would expect this to come down at some point, and then we'll look for a possible another entry. Okay? But we may even get a change in trend here pretty soon. Okay, well, check it out. Daryl, check out the Trader's Assistant. It's pretty basic. You just go into the download area, download it to your desktop, and it will be, I think, in an exe file, and then just double-click on it, and it will automatically install the update over your original copy. And then just open up the Trader's Assistant and start using it and see if it's printing the way you'd like it. All right, so let's keep going here. Bill, thank you, Bennett. Print function is working now in the TA. Great, okay, good. Yeah, we tested it. It seemed to work fine. But Bill, thank you for confirming that. That's great. All right, let's take another one. Brian is saying, can you look at KORS? Brian, what platform are you using? Just so I can look at it, try to look at it if you're using one of the three major platforms here. Ninja with IB. Okay, well, we'll just use Ninja with Kinetic. How's that? All right, so, and that was KORS. KORS. So we'll type that in. All right, strong uptrend for quite some time. I got to tell you, this is the way most of the stocks are really looking. And as you can see, it's been a healthy move to the upside on most markets, simply because every time it pulls back here, okay, it goes higher, and so that's much better than having a straight shot, so to speak. You want to have a little bit of correction. It's a more healthy and stronger trend. So this has been a beautiful trend, nice, easy to draw trend lines on. But again, we're starting to see bearish divergence between the owl on the far left-hand side and as prices have been making consistent new highs. So I wouldn't be chasing this to the upside anymore, but I would be expecting some form of change in trend here eventually, okay? Too early to go short, by the way. So when I say I wouldn't chase the market, that does not mean, I repeat, that does not mean I would short the market. It just means at this point, if you're long, enjoy the ride. If you're not, it's a riskier entry at this point, okay? Okay, Daryl's saying on his download for the Trader's Assistant, what makes it go to the desktop? Does it do it automatically? Well, your computer, Daryl, will have a default area where it's downloading your downloads. And probably if you go to your libraries or your computer on your computer icon on your desktop and click on that, you'll see a place called Downloads, and it's probably in there. And in order for you to find it, you may have to click on the date and bring up the most recent download. If you want to go back in and download it again from the actual traderscoach.com website, you have two options. You can download it to the same place, and then when it's done downloading, click on Run, and it will just automatically find it for you and run it. Or you can actually change the download area when you click on Download and point it towards your desktop if you can find it easier to find it there. So try it again, and once the download's complete, all right, then you can click Run and just have it run directly or open. Run or open, whatever your downloader says at that point. Okay? All right. Good session. All right, well, we're coming up on 45 minutes here, so we're doing pretty well here. All right, let's see what we got here. Keith is saying, Ben, how about, I think that's IEF for a wave 5. If we pull back briefly in equities, 7-year treasury make him. All right, let's just say the IEF. See if I can get it here. Okay, so let's see what we got cooking here. All right, so here we got a downtrend in place. Looks like a nice ABC correction. So this is kind of fun to look at since pretty much for the entire year we've looked at nothing but uptrends. So we've got a situation here, here, and you see how we're seeing what they call, this would be, somebody might see this and see bearish divergence between here and here. But you know what? You technically don't have bearish divergence because you don't have a lower low in prices. Prices is here and prices are here. So that's something to keep in mind on that. Now, with that said, you do have bearish divergence that was building inside 3. So you had a minor 3 here, a 4 here, and a 5 here. But notice during this entire time, the owl never went positive during this in this box. So these are minor 4s. So this is actually a major 3 here, and there are 5 waves inside 3. All right. And so now we're into an A. This is a major 4, B, okay, and C, so 4. So it looks like you had enough of a retracement, okay, shallow C, but if enough of a retracement, it's A-okay. So you could have gone short here on this one. Now here's a great example, all right, and now I'm going to open this up a little bit, all right, so we can see it more clearly. Okay, so let me just rotate this up to the upside. So, okay, so here's a great example of what I'm talking about. Remember I said earlier, when you get a pyramid, you can enter, okay? If you had gotten in on this pyramid, it was a gap down, so it would have been this price bar, and that technically would have been a negative owl, all right? You got a yellow PTF, so that's neutral, all right? So that's not hurting us, as long as it's not green on a short trade, and you got a red overall downtrend in place, okay? So you could have taken that trade to the short side and put your stop 1 tick above here, or if you really wanted to be safe, put it up above here, okay, because this is 4. Now, if you want a bigger trade size, then you're going to have to use the top of the pyramid. If you want a smaller trade size but more safety, then you put it on top of 4. Remember, when the entry, okay, is further away from the exit, your trade size has to go down in order to accommodate the additional risk of the stop being further away, because we want to keep our trade size at a consistent percentage while our actual our trade size risk, though, at a certain percentage, while our trade size amount is a variable that changes in order to keep the percentage a constant. Okay? If you need any help with that, go back and read through some of our materials, and you'll learn how we take care of risk control. So that's just a great example of that particular way in which you can look at that. Okay, here's a great question from Daryl. Do any of the weekly picks get covered call consideration? Well, that's a great example. As long some of the weekly picks, you have to see if they're optionable. Not everything may be optionable, but that's easy to check. But you know, Daryl, any trade we take, you can convert that trade just as easily to an option. For example, if we're giving you a bullish trade entry on a particular stock, you don't have to buy the stock. You can do an option play to take advantage of that bullishness. What option play would you take? Well, you could very simply buy a bullish call, and I suggest buying them in the money. You know, our trades on the trading picks are momentum trades. So we're not there for, you know, months and months. We're there for a few weeks, and that's it. So you don't want to buy out of the money options where the delta is too low, or you may not get the benefit of a quick move. So you want to buy in the money options. So you get that delta as close to the underlying movement as possible. Also, too, you got to be careful of time decay with options. So again, because we're not in them very much, all right, you don't have that much time decay to worry about, but you may not want to buy an option with just 30 days or 15 days left, because it will have an extensive amount of time decay as it gets closer and closer to expiration. So the answer to your question is yes, and of course you can do the opposite on bearish trades, buy the puts in the money. So those are just two very simple strategies, but I recommend going in the money with both of them, okay? All right, great questions. Bill, thank you, Ben and Jean. Have a wonderful Thanksgiving. Looking forward for our session Friday, if okay. Yes, Bill, we're on for Friday. So you are absolutely A-okay for Friday. And you have a good Thanksgiving, too. All right, so we're getting ready to wrap it up here, but anybody else out there with any more questions? This has been an excellent session, and I think some really good points and actual visuals we were able to display here. So it really created a great learning experience. Thank you, Bill. So again, all you that are new, and we have a lot of new clients here, we really welcome you and suggest you attend these Wednesday sessions, because you'll get something every week, all right? And this will be a great avenue for you to ask questions and get you ongoing support. Daryl, you're very welcome. You have a great holiday too, and you let us know if you have any trouble with the Trader's Assistant or you have trouble downloading it, okay? But give it a shot on your own. It'd be a good experience for you to try it and install it, and then see how it works for you. Bill's saying it's working on his end. We have tested it, and it seems to work very well on our end. So you give it a going over and let us know if you have any issues, but I think you'll be A-okay. Okay, one more question for Keith. Keith says he uses the picks with options. Suggests figuring out your average days held and buying in the money options that encompass that time plus 8 weeks, keeps the theta low. Thanks, Ben. Have a great Thanksgiving, you and Jean. Keith, that's well said. I mean, that's exactly what my point was, is you want to buy in the money options with enough time, and he's got a little formula that he uses. So he takes the days held and then adds 8 weeks. So that's a very good suggestion. And the reason he does that, again, is because of the time decay. He doesn't want to buy one so close to expiration, because the time decay will eat your premium. And so by giving you enough time, you eliminate that. Keeps the theta low, which is a calculation. It's one of the Greeks in options. You have several. One is delta, one is theta. Theta, of course, measuring time decay, whereas the delta focuses on your premium movement in relation to the underlying. The higher the delta, the more closely it moves in line with the underlying. Wow, boy, we covered a lot of stuff today, all the way from options to the basics. So good session. All right, any other questions before we wrap it up? Okay, good, Bill. Thank you. Okay, you're all set. All right, well, listen, I think we'll go ahead and end here. All right, everybody, again, have a great Thanksgiving. Don't eat too much, but eat just enough. And we'll be back here Wednesday. And Daryl's got one more quick question. Adds 8 weeks to what? All right, so what Keith was saying there is that you know the average number of days held on our trades is about 27. So you want to add 8 weeks onto the 27. So you want to try to, when you buy a call or a put to take advantage of whether the stock is bullish or bearish, you want to make sure you're probably around 3 months out on the purchase of the option. So the idea is you're going to have to see what option is closest, and then maybe you might have to at times buy one 4 weeks, 4 months out. Sometimes maybe 2 months is the best you can do, but you want to try to do the best you can so you eliminate the time decay as much as possible. Try to stay away from options expiring within 30 days. That's the main key. Okay? So he adds 8 weeks, if possible, to a normal hold period of 27 days. And Keith, correct me if that's not what you mean, but I think that's what you mean. Yeah, that's the way I do it too. Okay, he's saying correct. You know, with options trading, no matter how fancy you get with the option play, you still have to know or anticipate what's going to happen with the underlying asset. In other words, in order for you to do an option play, you have to know whether you're going to do a bullish or bearish one. And the only way you're going to know that is really what's the underlying asset going to do. Now, there are particular option strategies that are very risky that take advantage of selling a ton of them on the last day of expiration, but that's not what we're talking about here. What we're talking about here is using the trading picks in such a way that you can use options along with them. And so the key to this whole thing is knowing whether it's a bullish or bearish play. And you do that by taking a look at the trading picks and whether it's a long or short one, and then where the price target zone is. Okay? And as Bill says, you can adjust the contract size to anticipate max loss, time decay, and price. So that brings up another point with options, is that how do you control risk? Well, there's a couple different ways you can. One is, as Bill states, just make sure the amount you spend on the premium is that 2% level, so you don't exceed 2% loss if the option expires worthless. Okay? The other way to do it is look at the underlying asset or even plot the premium, and when it goes below a pyramid trading point on the underlying, then you immediately cover the option. That's another way of doing it. And I would suggest paper trading that until you're comfortable on a method that works best for you, of course. All right, well, again, happy gobble gobble, and we'll go ahead and end here, and we'll get this recording up a little bit later today. In the area here, we're actually posting these on YouTube now, so it will take you to the YouTube channel that we've created, and we're going to be posting all these on there as well. So everybody, have a great Thanksgiving again. We'll see you back here next week. I think we got all the questions answered, and so I'll leave the room open just a teeny bit longer, but I'll go ahead and mute out, and we'll see you back here next week.